Attention prospect buyers. Pay attention, as this may concern you. My name is George Amadova. I'm a licensed real estate broker in the state of Florida for Lago Brokerage Inc. And I want to address this to all prospect buyers or someone who's thinking of buying. I get many questions many times about credit score, debt to income ratio, and I'm going to try to make it as simple as possible. Granted, if you want more information, feel free, give us a call. My direct number is 347-423-8860. Now, let me give you an example. Most banks or lenders, they require a minimum of 580 credit score. Granted, that's not the only thing you need. And I say this because a lot of prospect buyers believe you need a 720, 780 credit score. That is incorrect. However, there are other factors to consider, which is debt to income ratio. So for example, if you have a 580 credit score, have you been working for 2 years on the books or have 1099s for 2 years? Debt to income ratio will be, for example, let's say if you're buying a house for $1,000. Well, 31% of that will qualify you what is called principal, interest, taxes, and insurance. That normally is 31%. Okay, P, principal, interest, taxes, and insurance, 31%. So on $1,000, for example, a month, that equals to $310. So $310 figure, that's the mortgage payment. Out of 1,000, you allow $310 towards mortgage payment. Now the next factor they look at is the back end, which is all your debts combined. That includes installment loans, that includes credit cards, that includes any debt that you have on the books that shows up. And you don't want to lie because you don't want to commit bank fraud. So that, on an FHA, for example, there are many lenders that have different criteria. For example, the conventional will be 42% debt to income ratio. But on the norm, and with manual underwriting, you could go up as high as 55% of your total debt. So you add up all these steps, including minimum credit card payments. Remember, not what you owe, but at least the minimum payment that you will be obligated to pay every month, which is only about $25, right? So they add up all your debts, your installment loan, your car note, and all that. And it cannot exceed 55% of your monthly total debt. So if your monthly income, as an example, is $1,000, then it cannot exceed $550. That's all your debt combined. So if you meet these factors, you are most likely able to get a loan approval. They're going to look, make sure you have no collections, also no medical bills. However, think as this with medical bills, I know credit restoration company that could easily get that removed. Granted, you will still be obligated to pay, but at least it will not affect your score, and it will not affect your debt to income ratio. So if you're interested, give us a call. I want you to think this as well. First time home buyers, like I tell my prospect all the time. When you rent a property, yes, you're getting a service. You're paying for a service on an apartment or a house, a rental. However, throughout the years, you basically are throwing money away. You can see that rents appreciate every year, goes up, right? And you are not accomplishing anything, no net worth, no equity. However, when you buy a property, I want you to think about this and listen very carefully. Again, this is for educational purposes only. You do want to speak to a CPA. Most of the payment that you pay is mortgage interest. So when you buy a house, you're paying a little bit towards the principal, which is the initial money you borrowed, right? And the rest is mortgage interest. So based on your tax bracket, your marginal tax bracket, for example, is 22%, 28%, whatever it may be, that interest is tax deductible. So your taxable income that automatically, as a renter, you will be giving away to Uncle Sam, right, to the IRS. Well, when you are a homeowner, there are tax benefits that you could reduce your taxable income. So you get some of that money back. This happens when you are a homeowner, not a renter. So I want you to think about this. You bought a house. You're getting tax deductions, all right? Tax deductions. But on top of that, the house normally, look at history, mortgage history, look at house history, it appreciates. In other words, it goes up in value about 4% a year. Some neighborhoods could be a lot more. For example, here is a lot more. But on the average, nationally, it increases about 4% a year. So here you are, your property that you bought, for example, $100,000. If it goes up 4%, that's 4% higher. Plus, the property itself, you reduce about 6% of principal. So you just built 6%, 4% on top on appreciation. Your total right now is about 10%. 10% you're building on your net worth, on equity that you could reinvest in the future for your college education for your kids, or you could buy another property rental and make money as an investment. Think about that, guys. Okay? You're getting 10% plus deductions on your taxes. This is why this is number one rule for minorities and especially Hispanics. So if you want more information, you want to buy a house, again, don't assume you need a 720, 740, 780 credit score. There are many factors, including seller's concession. I can help you come with some of the down payment you needed or some of the closing costs needed. One I'm very good at is negotiating with the seller in order to buy the house. So for instance, again, if you're buying a house, as an example, $100,000, okay, I could most likely get you back 3%, what is called seller's concession. What that is that the owner still selling you the house at $100,000, but he's giving you a gift of $3,000 towards your closing costs. Okay? Now think about it, if it's $200,000, 3% will be $6,000. Now I myself could help you with some of the closing costs, as well as I could get some lenders to come and give you some lenders credit. There are many ways to help you with your closing costs. Now if you're getting an FHA loan, for example, what you need is 3.5%. Okay? So for instance, 3.5%, all you have to borrow is 96.5% on $100,000. That's $96,500. The lender will finance the property as long as it appraises $400,000. Well, you got to come up with the difference, which is 3.5%. Now think about this. You need 3.5% down payment, and I could get you back 3%. Then what you need now is 0.5%, which is $500. As far as closing costs, we could help you with some of those closing costs. And there may be some programs available or grants available for you, depending on your credit score. There are many grants sometimes available, as long as the funds are available, for about a 640 credit score. So see, it's many factors. But this is why you want to speak with a professional, such as myself, where I could direct you to the right lender as well. Because not every lender gives you some of these programs that are available. Because we are in the business, we do it with this constantly. So we can help you. So don't wait, because we have historical interest rate. Your time to buy is now. Give me a call. Let's have a sit down. Let me show you how I can help you. Maybe even open up your investor, your entrepreneurial spirit, and how to get involved in investing later on. Thank you for watching. God bless. Please like, comment, and share. Thank you.